Hi everyone, I'm Heidi with Preferred Compliance Solutions, and this is part 2 of documenting assets that were disposed of. Before we get started, it's important to note that any real estate disposed of as a result of foreclosure, divorce, bankruptcy, or separation settlement is not included, but proof of these exceptions must be obtained for the permanent file. Now, let's get down to business. To document the value of the asset, the appraisal or tax assessor's statement showing the fair market value is needed. Sites like Zillow or Trulia may not be the most accurate, so it wouldn't be best practice to use these sites. To establish what the asset was sold for, the closing settlement statement should be obtained, and we'll use line M1 of the closing disclosure. Now, you might be tempted to use the cash that they received from selling. We'll get into that in a minute, but we're determining if the asset was sold for at least what it was worth. So the sale price of the property, line M1, is what we want to use. In this example, we can see, based on the appraisal, that the home was worth $355,000. Looking at the closing disclosure, line M1 shows the sale price of the property is $340,000. If the asset was disposed of for $1,000 or greater below the fair market value, meaning they didn't sell it for what it was worth, then the difference between what it's worth and what it was sold for is considered an asset and will be counted for 2 years from the date of disposal. This home was sold for $15,000 less than what it was worth, so that $15,000 will be counted for 2 years from the date of the sale. Finally, we'll look at the cash proceeds, whether they sold the real estate for more or less than what it was worth. If the cash proceeds shows cash received, the household should provide documentation of where the earned money is. Is it in a checking account, savings account? Did they go on vacation? What did they do with that money? You may be wondering why we're counting the assets where they just didn't sell it for enough. Well, in order to ensure affordable housing is available to those that need it the most, this rule is required to encourage everyone to try to get the value of their real estate when they sell it. It is to discourage those that might just give their home to their kids or somebody else for little to nothing in return in order to move into your beautiful community. Super easy, right? Thank you for joining us today, and don't forget to subscribe for more amazing compliance tips.